Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, March 25th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Start with the big picture, work our way into the day itself. This is a weekly bar chart that shows the testing and settlement below what had been a targeted long-term support area, stemming off that December high. We tested it back in February, bounced, retested it a couple of weeks ago, and even, yes, closed below it by a 1% margin, then setting off a meaningful long-term 2 to 3 month sell signal into the 101.81, possibly all the way down to 83.26 region. Now, the following Monday, which was a week ago today, the market gapped right back above this area and in one fell swoop neutralized the sell signal. And with that, the failure to follow through on a textbook longer-term sell signal is in itself a valid sign of strength. And so now we are anticipating over the next few weeks this descending range of what I would call midterm resistance at 194.43 to 201.27. And there is the possibility, I'm not going to call it a probability, but there is the possibility that you can actually trade off of this 242.66 channel top is in reach over the next 3 to 5 months or sooner. That sooner would come with a settlement above 201.27. A settlement above 201.27 would underscore, validate, and affirm the 242.66 level as not just a possibility, but a probability, a 2 to 3 month probability where we could top out on a quarterly basis. But that is the big picture. And yes, if we close this week back below 162.11 by the required 1% margin of closing Thursday, this is a short week. The Easter, we've got Good Friday coming up this Friday. If we close Thursday at 161.25, then we are back in the bearish column, longer term being over the next 2 to 3 months, expecting 101.81, 83.26 region over that time frame. And so if you've been bottom picking a Tesla recently, if you're in a long position now, anticipating, for instance, a bullish continuation recovery into the mid 190s, low 200 region, you probably should consider at least exiting that long position and then playing the short side as we move into later second quarter, because over the following 2 to 3 months, I would expect the market to continue south. Within a month or two, 120, 122, this steeply descending channel bottom, and as I say, over the next 2 to 3 months, 101.81. That would be the big picture, but that's not where we're at right now. And in fact, you can see in this image here that how we close below that channel bottom on a Friday, and we closed below it on a Thursday. On a Friday, it was by the full 1%. And then on Monday, we gapped right back above it. And so we are expecting this 196.15 descending channel top as a 2 to 3 week objective. The number is slightly different than what we're seeing, of course, on the weekly chart at 194.43. And that just happens all the time. It's the same exact formation, but created on the daily chart, 196.15, a 2 to 3 week target still above 164.14, which is the same channel bottom that we find on the weekly chart at 162.88. So it is a range of support We came close to testing it actually last Friday, came off those lows. And what we have now, of course, is 196.15 as a 2 to 3 week objective. So you may have bought the market over the last week and you're anticipating 196.15. And on the way up, we do have a meaningful resistance today at 180.40, which is followed up by the 183.06, 3/8. That is a 50% upside Fibonacci or a retracement off the February high against the recent low. 180.40 is sellable resistance for the day, possibly into later week. And if we close above 183.06, that is your secondary buy signal to 196.15. Keep in mind, we're expecting 196.15 anyway. So, be careful being an aggressive short seller in the lower 180s. There is the possibility, certainly, that we could fall back into, the lower 170s or lower, perhaps, over the following 3 to 5 days. But given the fact that we are testing or expecting a test of 196.15 over the next 2 to 3 weeks, a settlement above this low 180s is considered an eventuality, possibly this week. 180.40 is rising, and by the Wednesday, Thursday timeframe, the last 2 days of the week, actually converges with 183.06, just below it on Friday. Just below it on Wednesday, just above it on Thursday. It's going to be an important area as we get into later week, can contain at least daily buying pressure. Solid day trade level. So there you'll have it. Now we have today 172.03 is our intraday pivot point. This is a short-term channel bottom. We gapped below last Friday. It held the highs, can continue to do so today. From here, we can quite easily fall back to 164.14. So 172.03 is our intraday pivot point, and below which 164.14 is in reach, where once again, we can bottom out through April, and above which 196.15 remains a 2 to 3 week objective. If we gap above 172.03, even if we open below it and push through it, I don't see, if you're short, I'll let you decide how you get out on that, when everybody's a little different in terms of the risk strategy and so forth and so on. But if we push through or open above 172.03, I see no good reason to play the short side today, because I do think there's a real clear possibility we actually could reach the 180.40 channel top. So keep that in mind. Pushing or opening, especially opening above 172.03. Now 172.03 is just above the low of the high. It really is just above not only Friday's high of 171.20. I forget what Thursday's low was, but that is the pullback high of the last week and a half. And so 172.03 is just above all of that. So it's kind of perfect. In other words, it can set off. We could actually, by pushing above the 171.20 high from last Friday, test 172.03 pretty quickly, where we could top out on an intraday basis, and yes, below which 164.14 in reach today. Pushing or opening above 172.03, you should allow for 180.40, and you can trade as much. And so pushing above 172.03, you can play the long side, day traders, up to 180.40. And at 180.40, day traders can liquidate and even reverse and go short. And as it represents a range of resistance up to 183.06, perhaps set a short into later week, 3 to 5 day swing traders. 3 to 5 day swing traders, by the way, 2 to 3 week swing traders can bottom pick 164.14, as I mentioned, because above which 196.15 remains a 2 to 3 week target anyway. And I don't expect it today, but if we were to close above this 180.40 to 183.06 region, as I said earlier, we should within 3 to 5 days reach 196.15, which is represented on the weekly chart as 194.43 up to 201.27, which is a descending 1/3 speed line. This area able to contain buying through April. From here, we can fall back into the lower 160s over the following 3 to 5 weeks. We could continue to fill this wedge out for the next month or two. But once again, if we close above 201.27 over the next few weeks, 242.66 becomes a 2 to 3 month target, which is a 3 to 5 month possibility anyway, above 162.88. Take you back to the day itself. 172.03, open below it, intraday resistance, below which 164.14 in reach. 164.14 is really a range of support down to 162.88 on the weekly chart that can still contain selling, not only on a daily basis, but also on a weekly basis and through April trade. And above which 196.15 remains a 2 to 3 week objective. Now, if we were to close today, I think the 1% margin is valid during the week. So if we close today at 161 and a quarter or lower, I think you can play the short side. At the very least, I would highly suggest you exit long positions with a settlement today at 161.25 or lower. And when I say exit long positions, I'm talking to you, swing traders, 3 to 5 days, 3 to 5 weeks out. Obviously, day traders are going home with no position typically. But if you're in the 3 to 5 day to 3 to 5 week swing trade, crowd closing today at 161 and a quarter or lower, I think there's good reason to exit the short or the long position. Whether you should then play the short side is up to you. I do think that there is a decent chance that within the week, I don't think we show it anymore. Yes, we do here. I do think there's a decent chance that if we close at 161 and a quarter or lower today, 152.37 is in reach by Thursday's close. We have that as a session containment level. And then overall, I will say, and this is something that I've been mentioning now for the last couple of weeks, last week or so anyway, that if we close at 161 and a quarter or lower, yes, that is a sell signal as we move into the later second quarter. You may hold out. I don't know why this shows up as 160 even. It is supposed to be, let me comb this. I don't know why. 160.51, okay? So remember that number, 160.51. That is the actual level. Sorry, AI. Here we go. 160.51 is the low from a couple of weeks ago. And so I'd mentioned how earlier, we got the grand head fake from a week ago, over a week ago when we closed below this formation, only to gap right back above it on a Monday. I do think the quote-unquote insurance against another head fake would be a settlement on Friday below 160.51, which is that low. It's actually the move low following last July's high. That was just 2 weeks ago. So yes, closing below 162.88 is certainly a sign of weakness as we move into the third quarter. But in terms of playing the short side aggressively on a multi-week, multi-month basis as we move into the later second quarter, I do think that would be clarified with a weekly settlement Friday below 160.51. All right. I think that pretty much rounds it out. I am going to leave it at that for Monday's Tesla report. I'll be back tomorrow with Tuesdays. Please click like, share, subscribe. Check out our 2 stock picks a week. Last week was Raytheon and Intel, as I recall. The previous week was Google and so forth. They're all at the precipice of a 3 to 5 week to 3 to 5 month moves. We're always looking for 20% moves on those underlying stock picks. So check them out for free. You get a 5-day free trial. I'll be back tomorrow. You have a great day.